So tonight's game plan is going to be very simple. The SPY is setting up for a strong foundational daily chart pattern to repeat itself. I'm going to be walking you through the multiple patterns that I'm seeing on the daily chart. I'm going to be explaining to you the key levels. If you trade this plan, you use the levels and you use the proper confirmations once these levels hit, you should have a phenomenal green day heading into the market tomorrow. I'm going to walk you through how to day trade the SPY step by step. Let's get straight into the price action analysis. So in terms of the SPY, we are setting up for a daily chart pattern to potentially repeat itself. And I am seeing multiple patterns. So I'm going to walk you through the patterns along with the new key levels of interest where we are planning to trade the SPY heading into tomorrow. Let's get straight into the analysis. So in terms of the SPY, as you can see right here, we did end up having a gap up on this day, October 14th. And then it ended up, having a very nice red day today, barely gapping up. Now, with that being said, I want you to compare this daily candlestick and this daily candlestick. Just take a quick glance and study in terms of how they look like. Now, if you go back throughout the chart history, you're going to see multiple patterns and multiple similarities on what can potentially happen the next day with this pattern. If SPY gaps up or if SPY gaps down, I'm going to walk you through it, right? So in terms of some similarities, not exactly the same, but you can just see right here, you have a lot of green bullish candlesticks slanted to the upside. You have a lot of green bullish daily candlesticks slanted to the upside. Then you have this green candlestick right here. Then you have this red bearish candlestick right here, which looks very similar. And then in terms of the next day, when SPY had a nice gap up, it ended up having a very strong bullish trend day. I went back throughout the chart history and I've analyzed multiple times in terms of this pattern where if the SPY does have a nice gap up tomorrow, ideally above $580.50, it's likely going to be a strong bullish trend day where you can be looking for call options to be buying early into the market if we are gapping up, right? In terms of some other similar patterns, you can see right here on this particular day, the SPY had green bullish candlestick, red bearish candlestick, kind of similar in a sense. Next day, in terms of what it ended up doing, the previous closing price was 568.62. It ended up opening up at 567.71. So it did end up gapping down, having a very nice drop and then recovering. Based off of what I'm seeing, if it does gap down, it's going to try to have a massive drop heading into tomorrow, right? So just going back, I highlighted the multiple chart patterns that I'm seeing. You can see right here, very similar pattern. This one's nearly identical. It gapped up the next day. Very strong bullish move to the upside, right? So basically what the daily chart is telling me is if the SPY gaps up, it's likely going to be an overall bullish move. If the SPY gaps down, it's likely going to be an overall bearish move, right? And the reasoning we're going behind that is mainly because of the daily chart pattern, right? It's not going to be always when SPY has a gap up and it's a gap and go, or SPY has a gap down and then it just keeps on going down, right? It doesn't work like that. You have to use strong daily patterns and then you use certain levels to confirm in terms of the levels, right? You identify the levels where the bulls and bears take control, and then you use confirmations at these levels to confirm that this daily chart pattern is going to repeat itself, right? So you have this nice gap up right here, very similar, and then you have this red bearish candlestick. This looks exactly identical to what I just showed you in terms of the past 2 days. Next day, it had a gap down, and it just kept on selling off, and then it had an overall recovery, right? So like I said, man, just very similar in terms of some more similar, situations. I'm seeing a lot of patterns where it could potentially bottom slightly under the low of day today. You can see right here, green bullish candlestick facing to the downside, and then this red bearish candlestick. Next day it bottoms basically towards the previous day lows. Very similar situation in terms of this situation. It ends up gapping up the next day, right? So you see all the similarities. This is another, very similar, nearly identical, right? You compare these two daily candlesticks to the past 2 days, and you're going to see next day, if it gaps up, very strong bullish day, right? So those were the similarities that I was looking at. And what I want you to understand in terms of the bears to truly take full control tomorrow, the main foundation for SPY to be very bearish heading into market open tomorrow is going to be if it gaps down. That will be the main foundation in a sense. Now, in terms of the level for the bears to take full control, this is going to be the level, man. So the SPY is going to need to gap down. It's going to need to form lower highs below the previous closing price, 579.78. And to truly have a nice bearish move for the bears to take full control, we need to go under 570.70, right? So you can see right here, you got a lot of resistance on the daily chart, 577.70, 57770, right? A lot of resistance here with some nice quick drops to that 574.50, which would be the next support level. So in order for the bears to take full control, the SPY needs to gap down. And, we're going to need to see a 30-minute bearish confirmation, overall 30-minute bearish crack, and overall 30-minute breakdown in retest, breakdown below that support level to react as a resistance at that 570.70, right? Now, in order for the bulls to maintain control, they truly need to stay above the previous closing price, 579.78. If not, then it's going to try to bounce and bottom at 578. So for the bulls to take full control, they need to hold above 578. For the bears to take full control, we need to go under 577.80, right? So as long as we're maintaining above 578, the bulls are maintaining control. But keep in mind, if we are gapping down, there's a good chance that the bears could take control. So if you're not seeing bullish confirmations at 578 and we're gapping down and you're seeing that bearish move to 578, you're going to want to tempt puts on a gap down. As you can see right now, we are having a small gap up. SPY ended up closing at 579.78. We're currently at 580.21. With that being said, if we do gap up, it's likely going to be a gap and go. In terms of the gap and go situation, it is showing if we do have a nice little gap up, it's likely not going to drop back down to the previous closing price, but the first level of interest will be to buy at the previous closing price if we are gapping up. In terms of other levels you need to pay attention to, you need to be looking for previous resistance levels to reacting as a support. So if the SPY is gapping up, here's some levels you can look at. This is going to be the key level for a massive breakout. Right here, you can see on the 30-minute chart, 581. If we break above 581 and react to support, the 30-minute chart gives it away. We're going straight up to 584. That's price action. So if the SPY is gapping up, the daily chart signals it could be a very bullish day. And in terms of the big bullish move, based off this 30-minute pattern, you're going to see 581's resistance, break above resistance, forms a floor at that previous resistance, 581 to 584, that's a massive move. Break above 581, we're going to 584. We're holding 578, we're going to maintain bullish. We go under 577.80, we flip bearish, and we go to 574.50. Track under 574.50, next support level on the SPY is going to track under 577.80, right? So if we track under this key level, right, 577.80, react bearish 30-minute confirmation, break down and retest, means it breaks below the level, spikes back up, retest it, reacts bearish, forms lower high, forms resistance. We're going to be on pace to go to 574.50. That is the overall main game plan. If we gap up, interested in buying call options towards the upper resistance levels. Keep an eye on 581, keep an eye on pre-market resistance. If there's new resistance in the pre-market, SPY's breaking above it, wait for it to drop back down to test that previous resistance. Look for the dip buying opportunity, right? So you can look for something like this as well. You can see right here on the previous day highs in this situation on October 11th. We already went over this in the past videos. You have resistance right here at 580, resistance right here at 580. SPY breaks above those all-time highs, forms a higher floor, forms a higher floor, forms a higher floor, continues to push higher. Buy calls into the green bullish 30-minute confirmations. No reason for puts, right? Pushing above 581, straight up to 584. Stay the fuck out of puts. In terms of puts, it's mainly just going to be a situation if we're gapping down for the foundational piece, but then for the bears to take full fucking control, we need to go under 577.80, right? So that's the overall game plan, man. Very, very simple, clear cut. If you use this plan and you use the 30-minute confirmations that I've been teaching you, you trade the 10-day 30-minute chart at those levels, you should do absolutely phenomenal. 574.50, 577.80, 579.78, 581, 584. The best levels to be trading at 577.80, 578, 581. Those are your true best levels where the big moves are gonna occur. Gap up, bulls take control, upper levels. Gap down, bears are gonna attempt to take control. For them to take full fucking control, we need to go under 577.80. That is the game plan. Short, simple, and sweet. You use this game plan with the levels, with the confirmations, and you let me know how it is that you ended up doing trading the SPY tomorrow. With that being said, that's the overall game plan. It's going to be a short, simple, and sweet one. If you went back throughout the daily chart and you simply analyzed the levels, you should have been thinking very similar in a sense if you're using what it is that I'm teaching you. This is very simple overall price action, man. I'm telling you, and you need to keep an eye, right? On this level, if we do drop back down to 578, the bulls are going to try to run this up at 578 to 579, especially if we did not gap down. But even if we gap down, if you're seeing bullish confirmations at 578 and we are not going under that 577.80 level, you can try calls. Just remember the foundational pieces says, gap down, it's going to try to go bearish, but for the bears to take full control below 577.80. Gap up, it's going to try to really push bullish. That's when you want to buy calls at higher resistance instead of towards the 578 level. Just be cautious if you buy calls at 578 and we are gapping down. Be cautious if you buy puts and we are gapping down. Wait for the breakdown and retest. Wait for it to go under 577.80 and then spike back up, react as a resistance, right? If 578 holds up, even on a gap down, it's going to maintain overall bullish. Keep these things in mind. If we're gapping up, it's likely just going to keep on fucking running. Aim for the upper levels. If we're not at that 581, look in the pre-market. In the pre-market, if there's a new level, you're going to be looking at the resistance. Look at the resistance in the pre-market. If SPY has a nice drop in the pre-market from a resistance level, you now know the level for the break and retest, right? If there's resistance right here in the pre-market at 580, and then it spikes to 581, wait for it to drop back down to 580 to buy the dip for the overall breakout and retest overall strategy in that situation. Just understand the big fucking moves are going to be at 577.80, 578, right? Bull zones higher, bear zones below. Massive fucking moves. And 579.70 is that make or break previous closing price, but the true big breakout move would be a 581 to 584. That's the overall game plan, man. So in terms of today's trading, in terms of today, it was just not my day, man. For those of you who study in terms of the way that I trade, you should have recognized this overall opportunity. This was an opportunity for calls. I went over this many times throughout past videos, where when the SPY has a red bearish candlestick facing to the downside and then a red bearish candlestick facing to the upside, when you see that overall pattern, especially if it's at a key support level, you're going to want to buy call options on the opening in the next 30 minutes. It should be bullish. So in terms of my overall trading, I had 2 smaller wins on puts. Then I tried calls. The calls did not work out. Then I switched to puts. The puts did not work out. But overall, based on how SPY was trading with the 30-minute chart and how the price action was today and the levels that we are at, I didn't have much interest in trading that all today. I didn't like the price action. It was extremely overall choppy. There wasn't that many 30-minute patterns on the day. The main one was that one for the call opportunity. You could have also said, red, green, red, bearish in a sense, but you could have said red, green, red, bearish in a sense, red, green, red, bearish in a sense for all the lower highs. Those are some bearish moves in a sense. But overall, just in terms of how we were trading at and in terms of the levels that we were at, I didn't like the overall price action today. So, I basically told everyone if I make a trade, I'm just going to be sizing in very light. I'm not confident in these trades, if I make them. And it's just going to be more of a situation where it's just more of a lotto and a YOLO. So I personally didn't do anything too crazy today, just some small wins and then bigger L's. This was actually my first small red day within the past 2 months of trading. And I definitely saw it coming if I were to participate in this. But like I said, man, I did choose to participate in terms of like not trading 100% like the best setups and just not trading in terms of price action patterns I didn't like. But I understood the consequences with that. So I sized in extremely light and I knew these were like YOLO plays and stuff like that. And I let everyone know in terms of what it is that I'm doing. But like I said, in terms of it's rarely something that I do. But I did have the awareness to recognize in terms of what I was doing. And the main reflection of that was just avoiding making a bunch of trades and just also sizing in very light. That's how I kind of combated it, right? So if you have that awareness in the moment, you either just don't trade, or if you want to trade, you just size in very, very light and you don't make a lot of trades. That's how you combat that situation where if there's not many patterns, the market's not giving you anything, you don't like the price action, or maybe you see something, but you just don't like the way it's moving or the level it's at, right? If you don't have everything stacked within your overall favor and you choose to trade, if that's what you're going to do, then just size in very, very light and don't overdo it. And in a sense, that is what it is that I did end up doing today. But like I said, I had the awareness and I let everyone know. So it was more just like a dud of a day, man. Today was just not my day. Now, with that being said, tomorrow should be phenomenal, man, because the way that the SPY is setting up, it is setting up for a truly phenomenal setup heading into the market tomorrow, man. So I'm telling you, you use this game plan. We're going to come in very, very strong heading into the market tomorrow, man. With that being said, man, we absolutely crushed on Monday. In terms of today, today was basically dud. We did have many members end up going green, though, because I did call out puts twice at first, and we had a lot of people hold those puts. But like I said, in terms of my overall day, this just was not it. But I knew that I sized in very, very light, and I literally called all the plays YOLOs, and everyone knew I had no confidence in these plays. Like I said, in that situation, it's best to just not trade. But in terms of this situation, I just decided to trade. It is what it is, man. But like I said, I was aware of what it is that I was doing, right? Is that the right thing to do? No. But like I said, man, I just wanted to get a taste of the overall market and price action, and I did try to dabble in it. And I did end up having a small red day. Now, with that being said, we're going to come back extremely strong heading into the market tomorrow, man. For those of you who are serious about trading alongside with us, it's going to be the first link down below within the description. You get access to a real-time zero-date options trading alert system. We're known for buying cheap, far out of the money option contracts that are extremely low risk. We are known for selling them deep in the money for the biggest percentage gains within the market. We have the highest win rate in the game with this particular trading style and trading system, and we've created a real-time trading alert system to back the overall trading style that we have in terms of the real-time trade alert system to strengthen our overall trades. This is, the simplicity of it. So in terms of what we created in terms of this system to make the most strategic alert system, the most strategic trading system, is very simple. We don't use stop losses. We can put in our max risk per trade into these contracts. They're very, very cheap, 50 cents, 30 cents, 20 cents, very low risk, biggest percentage gains within the market when you're holding for bigger wins, selling in the money, right? So we hold our trades. We're known for selling in the money when we're buying further out. And they're very cheap, they're very low risk. So in that situation, we don't need a stop loss. We can put in our max risk per trade. And if the contracts go to zero, we lose everything in terms of what we put in. That's the beauty of options. You know exactly how much you're going to lose when you're trading naked options. The most you put in, whatever you put in is the most you can lose in that situation, right? So they're so fucking cheap. You can put in your max risk per trade, and these trades can go up 200%, 500%, 1000%. They can go up unlimited percent every single month. In terms of leaving runners, there's many 500 to 1000% plus plays. In terms of selling full size, we typically have 1000% plays every single month. If you hit a 1000% play and you're sizing in evenly on each play with proper risk management 101, if you hit 1000% on a trade, you can still be profitable with 9 losses in a row. If you have a 1000% win, you can lose 9 more times in a row and still be profitable 100% net in that sense, being net positive in that sense with a 10% win rate. That's the beauty of having the biggest percentage gains within the market. People won't tell you this because they're not making big percentage gains. Most people do not hold their trades. Most people get in and out very, very quickly. Most people use a stop loss. We do the exact opposite. We do not use stop losses. We hold our trades for longer periods of time. We make the biggest percentage gains. Over here, we're focused on the percentage gains, not on the overall dollar gains. Our percentage gains are going to be so fucking bigger than their dollar gains that we're even going to be making more dollars than them in a sense if we're putting in less dollars because the percentage gains are going to be so fucking massive, man. So we buy cheap borrow the money option contracts. We're trading zero-date options. We sell them in the money for the biggest percentage gains. We don't use stop losses. I don't believe in stop losses, especially with this system that we've created. It's not necessary to have a stop loss. If you can put in if your entire position size is your max risk per trade, think about that. Your entire position size is your max risk per trade. Most traders can't do that because they buy something that's expensive, right? If you take a big fucking position size, you're not going to be able to have your entire position size as your max risk per trade, which means you're going to be fucking scared and you're going to use a stop loss. And then people like us who know where your stop losses are and who know how to trade and hold for long periods of time, well, we're going to take advantage of that situation, man. You're going to get hunted out of your fucking stop loss. And like I said, in that situation, no matter what style of trading I'm using, I just don't believe in stop losses, man. People know where the stops are going to get hunted. I want to see how it reacts at that level. And then if I just want to get out very, very quickly, I could just sell at fucking market very fucking quickly. So with that being said, no fucking stop losses. Now we do set profit stops. We set profit stops to ensure that when we are green on a trade, we don't go back to red. We go green to green. If you are green on a trade and you set a profit stop, it's impossible for you to go back to red, right? So if you're up and you set a profit stop, you get stopped out for a profit, right? If you enter a trade and you set a stop loss, you can get stopped out for a loss. We don't like to lose, so we're not going to set that stop loss, and it's not necessary with our type of trading system and style. Now, when we set the profit stop, we move the profit stop higher. You're going to want to move your profit stop higher along the way as the trade's working in your favor. to ensure that you do not get back the bulk of your overall gains. And also understand, in terms of adding, we mainly focus on adding to winners quickly. We found, in terms of what mainly works best, is adding to winners instead of adding to losers in certain situations. Instead of adding to a loss, I don't like doing that. I don't like averaging my costs down, right? Because on these trades, when we're down, it could be 30, 40, 50%. In most situations, it just makes sense to buy another strike instead of averaging down into a loser. Just buy another strike, right? So you can buy another strike if you're down, but that's in terms of a situation when you're down. But in terms of being up, we like to add to winners, man. That's what we found tends to work the best, right? So when I'm down, I might look to buy a new strike or just do nothing because I don't like adding to losers. It depends on a trading situation. And then when we're up, we add to winners. We add to winners to increase the profits. And when we're up a little bit, 5, 10, 15%, very small percentage gains, very small percentage wins for us. We like to add to winners to increase the winning. We set the profit stop, we move it higher, we get stopped out for profits. My personal preference is to sell for wins into the moves. But even if you're selling into the move and selling into wins, you're still going to want to have a profit stop set just to ensure that you don't go green to red on that situation. If the market has a big move against you, that's the last thing you want. You get stopped out for a profit if you didn't sell the move, and you can always get back in on the trade, right? So with that being said, if you want to trade alongside with us, I can assure you, we are going to absolutely fucking crush it. Heading into the market tomorrow, I got the perfect fucking game plan. We got all the eyes on the fucking market. We're going to crush it, man. We have the whole deck. Everything is mapped out. Tomorrow is setting up for such a better day compared to today, man. And like I said, man, if you know, in terms of the overall market, you're looking at the price action, you're looking at the key levels, you're looking at the confirmations, you know the deck, you know what works best for you. If it's not there, it's best to just walk away. If you want to dabble in it, size light, don't overdo it. You know, you're likely going to end up red in that situation. It's best to just do nothing, right? But if you do it, like I said, just size light, and don't do anything crazy. Don't go over trading or anything like that, right? And always have that awareness. So like I said, today was just not our day. It was my first red day in like 2 months. But heading into tomorrow, we will absolutely crush it, man. So if you do want to join us and you do want to trade alongside with us, it's going to be the first link down below the description. I really encourage you to use this trading plan because tomorrow, this is looking like it's going to be a phenomenal opportunity to make money. The market isn't always going to set up for predictable opportunities like this, where we're getting a foundational pattern with the daily chart, along with very strong levels. And I'm telling you, man, tomorrow should be a very simple day, just using mainly 3 simple levels: 581, 578 to 570, right? Those are the main 3 levels. You know, if we go under that 577.80, we're going to 574.50. We break above 581, we're going to 584. Make or break previous closing price, we're gapping up, likely bullish. We're gapping down, could be bearish or bullish. If the massive gap down, likely bearish. For the bears to take full fucking control and truly be interested on puts on a gap down, we go under 577.80. Very simple. Use those main 4 levels, you know, 574.50, 577.80, 579.78, 581, along with the gap up, the gap down information I gave to you, along with, you know, the 30-minute confirmations. You should have a phenomenal green day heading into tomorrow. So if you're serious about trading alongside with us and making money with us, it's the first link down below within the description. You know, to learn how to trade, you're going to have to trade. And we have the system. We've mastered this style of trading, and we've created an advanced system. And in terms of the system that we've created, we're simply documenting what it is that we're doing. So we have a trading style with the price action, right? Once you have this trading style, you got to create a system. In terms of some systematic approach, you know, we have the technical strategies, we have the price action. So part of the system, we're going with FAR, the money option contracts. That's the asset class that we're trading, right? And in terms of, you know, the system, setting profit stops, adding to winners, avoiding adding to losers in most situations. If we do want to add to a loss, maybe we'll buy a new strike, right? And not using stop losses, man. So once you master price action, once you master trading, you got to figure out, you know, what do you want to do with this? If we're trading the chart, what are we going to trade? Are we going to trade shares? Are we going to trade in the money options? Are we going to trade FAR the money options? Are we going to trade futures? This price action, in terms of what is that I'm teaching you, I'm trading the chart. So whatever has a chart is going to work on. But we found that mastering one ticker is the best way to go about trading. And we've chosen to master the SPY, right? And then towards Thursday and Friday, once a lot of stocks in the top holdings in SPY are beginning to become 0-day options and the contracts are a lot cheaper, we will look for the best setups at the best prices, the best opportunities on those particular stocks, right? But like I said, man, systematic approach, you trade one ticker. SPY has the highest volume, the most liquid options. Not only that, it has highly predictable chart patterns that work extremely well. If you study the 10-day, 30-minute chart, and you do this every single day from market open to market close, you have the awareness, you have the education, and you're disciplined, you're going to start to see nearly every single day there's 2 to 3 lucrative opportunities just on SPY, which is more than enough when you have a system that works, right? So we have the ticker, we paired it with far out of the money option contracts, very cheap, very low risk. Rich people prefer to do this. They don't mind holding their trades because they can pay less for their premiums, pay less for the contracts, risk less, and make the biggest percentage gains. We can outperform everyone by just buying an option contract that's more further out of the money. You have to know how to trade this. You have to know how to time these properly. And you do have to hold a little bit longer to make the biggest percentage gains. But if you trade them during certain periods of time of the day, you can still outperform anyone, even if you don't hold for a long period of time. Which is why I would question anyone who's trading options, but they can't figure this shit out, man. Because I'm telling you, during power hour trading session, you can run up 2 to 3 trades within the span of 5 to 15-minute holds for multiple 100% profit returns, if not 1,000% profit return, right? So during certain times with certain algos, like the 351 algorithm, there's many opportunities where you don't even have to hold your trades a long period of time. If you just trade during those times a day, and you can make the biggest percentage gains within the market, man. So you got to ask yourself, what do you want to optimize for? In terms of the system that I want to optimize for, something that's cheap, something that's low risk, that, you know, someone who doesn't have a lot of money can do, or someone who's rich prefers to do. Because like I said, if I know how to trade, I know how to hold my trades, I'd much rather risk less of my money and make bigger percentage gains, which will also yield me more dollars than the people who are holding for such short periods of time, going in the money, getting in and out very, very fucking quickly, man. If you know how to trade, you go further out of the money and you sell in the money for the biggest percentage gains, right? So if we mastered this system that's very cheap, that's very low risk in a sense, man. It's very hard to find a system where you can put in your max risk per trade and just let it go to zero. You can put in your entire position size as your max risk per trade, right? I told you, nobody does that because they're buying something that's high. They can't put in their entire position size as their max risk per trade because they're paying for something that's a lot higher priced. And they usually don't hold for long periods of time. But even if they do hold for long periods of time, since they're buying at such higher prices, going with in the money option contracts or just buying shares, they'll still set up fucking stop loss. They're sizing in big to make their gains. That's the worst way to fucking trade. If you're sizing in big to make your gains, you're going to need a high win rate. You're going to need stop losses. And you're typically not going to be able to hold for any big fucking wins. None of that shit works. I'm telling you, man. These people who are saying small wins add up. Dude, if small wins add up, you better have a high fucking win rate and you better set a tight fucking stop loss. The fuck? That shit ain't gonna add up, man. If you want to make money, you want to get rich, you need big fucking gains. And when it comes to big fucking gains, most people, they put in their hard-earned dollars. They put in their portfolio to make big dollar gains. That's where they go all wrong. They can never win big. They can never hold, because if they did, they would have to have such a, it's not going to work. They're going to get stopped out, right? How the fuck are you going to hold a trade if you're sized in big? How are you going to manage your risk? The only way to manage your risk if you're sized in big is to get stopped the fuck out. How are you going to hold if you're down just a little bit? You're going to get stopped out every single fucking time. The win rate's going to destroy you. You're never going to be able to hold. So you're just going to keep on getting fucking stopped out, man. That's what people don't get. With us, during power hour, we're down 50, 60, 70%. In certain situations, I'm laughing my fucking ass off. I'm like, dude, all we need is this 30-minute candlestick to close in our fucking favor. We're going to run this up 200% plus. If we're down 50% during power hour, since we didn't get in at the exact lows, we'll make like 200% instead of fucking 500 to 1,000%. The ones who get in towards the bottom make the biggest percentage fucking gains. And if we're that fucking confident, we could just buy a new strike instead of averaging our cost down. I'm telling you, man, we're doing the complete opposite of what everyone's doing. That's what makes us different. In order to be successful within the market, 98% of traders lose because they're all doing the same fucking thing. They're not experimenting. They're not trying anything new. They don't have a systematic approach to the fucking market. I told you what most people do. They buy something that's expensive. They set a tight fucking stop loss and they size in fucking big. If you size in big, you can never hold for a fucking win. It's impossible. You can never hold for a massive win within the market if you size in big. If you choose to hold for the massive win, you're going to get stopped out every single fucking time, or you're just not going to have a stop loss and you're going to blow up your account. That's what's going to happen, right? So with us, our entire position size is the max risk per trade, right? If you're not buying far the money option contracts and you're trading with real money, you're going in the money, you're buying shares, you're buying penny stocks, whatever the fuck you're doing, you can't say that, man. People can't really say that where they put in their entire position size as their max risk per trade. I'm telling you, buying something that's cheap and low risk has its benefits, but this takes a lot of time to master, man. So I'm gonna leave it at that. I'm just trying to open your mind up and kind of just explain to you what a lot of traders doing wrong. It's just very simple, man. They aim for small wins, right? Which is going to give them a lot of fear, and it's going to create a habit where they exit quickly. They exit their losses very fucking quickly. They set stop loss. They have a lot of fear, right? They're going to realize, dude, these small wins are not adding up. I'm going to size in fucking bigger, right? And then psychologically, they're going to get fucked at times. They're going to try to hold for bigger wins. And if they hold for fucking bigger wins, they're more likely to hold for a bigger loss. It's a psychological game. Even if they have the stop loss on, the vast majority of the time, you can't afford to win fucking big if you got a tight stop loss on. You're going to get stopped out every fucking time. Your win rate's going to fucking destroy you as well, dude. We're doing the complete opposite over here, dude. Over here, we're like, dude, my position size, my entire fucking position size is my max risk per trade. Where can you say that? You're not going to be able to do that with shares. You're not going to be able to do that with in the money options. They're too fucking high, right? With this, it's like unlimited fucking leverage. 20, 30, 40, fucking 50 cents to control 100 shares of fucking SPY. SPY's priced at fucking 580. Do the fucking math. The higher fucking SPY goes, dude, this is going to be fucking insane in the future. You guys realize it wasn't too long ago? Just this 0-day options on SPY every single day? This is like new, man. This is only like a couple years old. This is like new in terms of SPY having 0-day options every single fucking day. This is still considered a new fucking trend. You should see like historically on how high the volume has gone up throughout the past 2 years. We were one of the first groups to capture this fucking trend, man. We were trading SPY options when the volume on these contracts, when there wasn't even 0 dates every single day. We were trading SPY options when there wasn't 0 dates every single day. We were trading SPY options when the volume was literally less than 100,000 on the day. As time gets on, the boom is going to get bigger and bigger in this situation. So the best time to learn this skill set and to get involved with it is now, man. I'm telling you, it's just a learning experience in a sense, just to trade and to gain experience and to grow your account percentage-wise, especially if you have a small account. There's no really other option. If you're trading with real money, there's really not much you can really do, man. There's really not much. We've tested everything. If we're trading the chart, what asset class are we going to trade? We're going to go in the money. We're going to buy penny stocks. We're going to trade shares. I told you, master one thing we found in terms of with what we have, it works best with SPY. And if we're going to hold our trades a little bit longer, we want the best system for our money option contracts. So we've got it. If you're trading with real money, in terms of another comparison people can make with a system, well, maybe they want to go the prop firm route. I'm not going to be getting into that. That could be another thing. We do have some members, they do trade with a prop firm, right? They have their own system with that, right? But I'm speaking in terms of trading with real money. That's a separate video if you're not trading with real money. Now, with that being said, man, I'm just trying to open your mind up to something new and explain to you in terms of what most people are doing wrong within the market. Now, this, in terms of what we do, 98% of people lose money doing this. It's very, very true. 98% of traders lose money doing this, right? This is like one of the hardest trading styles and systems to fucking master. The beauty of it is we figured it out. It's very cheap. It's very low risk. And you don't need a lot to get started. It is recommended, though, that you do have at least $2,000 to get started with. But we do have members. I've seen it where they start with $500, $1,000, and they double, triple, quintuple the fucking account within a month. I've seen it. It's definitely possible to fucking do that. Everyone has their own fucking strategies, right? Maybe they have a $2,000 account that they're willing to trade with, but maybe they're only funding their account with $500 and they're trying to grow a $500 account instead of the full 2,000. And if they lose that, they add another 500. There's different ways to go about it in terms of how you want to actually grow the account and different strategies, right? But with this, it basically opens you up to a situation where you can do anything within the market. If you're buying something that is this cheap and this low risk, you can basically do anything within the fucking market. That's the beauty of options. Options give you options. And what's great about that in terms of that situation is you know, since options give you options, you got to figure out which options are going to have the best options, which options are going to give you the most options. And I already told you, it's out of money option. It's not in the money option. If you buy an in the money option, you're going to pay more. If you pay more for something, you risk more. And typically, when you're paying more and you're risking more, it tends to go up less percentage wise. So you got to remember that, man. When something is higher priced and you are paying more, it tends to go up less percentage wise. Now, these 0 date options are expiring every single fucking day. And you could just keep on buying these out of money fucking contracts if you know what you're doing and make 100, 200, 300, 500% fucking returns every single fucking day. Doing this is predictable once you have the right system, right? But I'm telling you, if you're buying something that's higher price, you're not going to be able to say, man, I can make 500%, 1000% at the speed of fucking light. And you're not going to be able to size in terms of, like I said, our entire position size. We can just lose our max risk per trade. Usually, traders set a stop loss. And when they get stopped out, they lose their max risk per trade. If they don't get fucking stopped out, they lose a fuck ton of money, nearly blowing up their fucking account because they're sizing in fucking heavy and they're buying something that's expensive, right? And if you're doing that, they don't fucking hold. And if you don't fucking hold, you don't win fucking big. You're never gonna fucking win big if you don't fucking hold, right? In order to hold something, you have to put in smaller amounts of money. You have to widen the stop loss or just not use a stop loss, right? Not everyone wants to hold, and that's cool. If you don't want to fucking hold, chain yourself to a fucking stop loss, size in fucking bigger, and never take advantage of a big winning move. It makes no sense, dude. Me personally, these traders fucking out there who don't hold their fucking trades, it makes no logical sense to have a trading system, to have a trading style where you never hold a trade. It makes no fucking sense. I have a plan where if the SPY gaps up and it breaks above 581, it goes straight to 584, and it can happen within 30 minutes, it can happen within an hour, but that's what the overall move is. So why the fuck would I not hold if the move is going to be that fucking big, man? I'm telling you, most people train themselves to be a certain way. They might see the big move coming, but they're trained to perform a certain way. They're trained to chain themselves to a stop loss. They're chained to a big position size. You know, they're chained to fucking getting out quickly. They're trained to perform a certain way. They can even have the awareness, well, wow, this is going to be a big fucking move, but they train themselves to fucking have a fucking stop loss, to size in fucking big, to never hold their fucking trades. They're always getting stopped out. Why would they feel comfortable holding if they're sizing in that fucking big, right? If you size in big, that means that you don't hold your fucking trades. And in a sense, you're never going to win fucking big, dude. I don't care how fucking big you're sizing and you're using a tight stop loss, you're never going to fucking win big. And fuck that small win shit. If the market's giving us a move to win fucking big, I'm winning big, dude. That's a fucking choice. If the market's saying 581 to 584, why the fuck would I get in at 581 and sell at 582? Wouldn't I hold a little bit longer and get out at 580 fucking 4? Yeah, set the profit stops, sell into the moves, leave the fucking runners. I get it. Move the profit stop up, right, to protect the overall move in case it goes against you. But you get the fucking point, man. You could just trade the big fucking moves. Most traders, they truly have no fucking idea what it is that they're fucking doing, man. They're just so fucking trained to be a loser. I'll size in bigger. I'll set a fucking stop loss. I won't hold my trades. When the market gives me an amazing trading opportunity, I'll just keep on selling for small fucking wins. They're fucking, like, dude, they're fucking degenerates. Take advantage of what the market's giving you. The fuck? You need to win big. You don't need to win big on dollars. Win big on fucking percentage. Get used to fucking holding. Get used to winning and winning fucking bigger. Fuck this small win add up shit. Fuck that, man. If you want the small win to add up, do it on the fucking dollar side. Size it in less, bigger percentage gains. Let it do the work for you. But if you're sizing in big, saying the small wins are going to add up, fuck that. This is 2020 fucking 4, man. The standards are up fucking here, man. If you want to say small wins are going to fucking add up, have the proper risk management, size in small, hold a little bit longer, and take those smaller gains in a sense. And those bigger percentage gains are going to add up to much bigger dollar gains in a sense, right? Have the proper risk management, man. Don't fucking aim for small wins, size it in big with a stop loss. That's the dumbest fucking thing you could do in the market, man. So I'm putting you onto the game. It's the first link down below in the description if you want to join us. I will see you guys tomorrow within the chat.